Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth Podcast. Today, I have another special guest, Heather Dreves. Is that the correct pronunciation, Heather?
That's correct. Good job.
And she's out of I wouldn't say a sister state, but a close state to North Dakota. She's up in Idaho. We're along the northern border together. So welcome, Heather, and I appreciate you taking time to get on a podcast with me today. So
absolutely. Thanks for having me.
You bet. So Heather is the director of funding at Secured Investment Corp and fund manager with one of the fastest growing companies in the private money marketplace in the United States, focusing primarily on residential real estate investment. Is that correct, Heather?
That's correct. Yeah.
You want to just maybe expand on that a little bit? I probably butchered the introduction a little.
Yeah. No, that's fine. No, I'm with Secured Investment Corp, and we are located in northern Idaho, and we are actually a nationwide, what they would consider a private lender. So what that really means is we provide funding to active real estate investors, and we do this through the capital that we raise. So the side of the company that I really focus mainly on is working with clients that are looking for passive alternative investment options, and essentially alternative investment options that are backed by real estate. So these are investments into real estate assets, specifically single family up to 4 units. So it's kind of interesting because we work with all types of clients, active investors, and then people that are just really more passive.
Gotcha. And one of the things it says that you're providing private lenders and real estate investors the ability to connect. So you're kind of a matchmaker in that.
Yeah. I mean, I've been in the private money industry for 20 years, and it was kind of mind-blowing when I came in. I mean, about all I really knew was that I had a mortgage on my primary residence. I, like a lot of people, assumed that if you wanted to buy real estate, whether it was for personal use or investment purposes, that you had to go to a bank. I had no idea that this private money world was out there, not only for active people that are buying and selling and holding rental properties, but then also for people that were looking to invest outside of your more traditional sources like the stock market. And it was eye-opening. I had no idea. And I found that I really had a niche for working with our clients that were looking to invest capital. That was really my expertise and really my passion to help people create wealth for themselves and their families in a really passive environment.
Gotcha. That's why I think this fits so well with what we do. I mean, obviously, again, my clients have heard this many times, but I'm going to share it with you. I run with 4 founding principles, and the first one is to think long term, which real estate fits perfect with the real estate idea, right? But it also fits with this idea of when you take control of the banking function of your life, this isn't just a single event. This is a lifelong process that we deal with. So it has to be a long-term venture. The interesting part is, second founding principle is we believe in that God has put all the knowledge that you need, Heather, is right inside your head. Sometimes it's covered by weeds and clutter, and our job is to help empower you to go kind of clear that out and then find those that can help us achieve those things that we want to achieve, right? We don't always have to be able to do it ourselves.
Right.
I think I just lost the guy's name, the Who Not How.
We just read that book, our company. We do a book of the month. And I love that book, Who Not How. Yeah.
So let's find who can help us and not figure out how to do it ourselves, right?
Right.
And so that's one of those things. But again, that knowledge is within us. It's just, what is it that we want to cultivate? And what is it we want to grow? Again, I'm a farm boy from North Dakota, so it always comes back to the farming aspect to what we do. But what is it we want to grow in our mind and our thought process, and then get rid of all the other weeds that are out there? So empowering people to do that. And then again, the third is just empowerment of people instead of doing it for them. Let's empower them so they understand what they're doing. I don't want to be a gatekeeper. I don't want to be a person that you have to go to get information. I'd rather teach you than have you do it, because eventually I will graduate from this world. And
right.
What is that? My clients. And then ultimately it is the generational aspect of what we do, because there's so many people that, I don't want to say are in poverty, but I would call them poverty because they don't think there's another way out.
Right.
And if we can just teach them that there's generationally, this is how people get out of kind of the rut that they're in, or the caste system that they're in, that's self-imposed, is finding different ways. It's take control of the banking function. How do you implement or use strategies like real estate to do all those type of things? So again, the people that are in real estate really get what we do with the IBC concept, because it kind of worked hand in hand. we're controlling the banking function, and now we're going to put it to work in a passive income perspective, work with you to find other type of, just like I said, it's one of those things where I think they work so well together because money has to flow. It has to be moving in order to be valuable. And that's kind of where you come into play.
Yeah. And we've helped all types of clients. That we deal with a lot of clients that are utilizing the infinite banking strategy. We work with a lot of clients that have IRAs and 401ks that they have set up as a self-directed account, meaning they now direct where they're investing that capital, because I think you hit the nail on the head. People understand these strategies and how to utilize the infinite banking or how to set up these IRAs, but that's only half of it. Now you got to deploy that capital, and you need to deploy it in an environment with an operator that you trust, and that's going to get you the kind of yields to accomplish your long-term strategy. And I get these clients on the phone all the time. Oh, I want to invest in notes and I want to invest in real estate funds. Okay, what are you trying to accomplish? And then after having a 15-minute conversation with them, sometimes we realize that what we offer isn't going to get them to their goal, and sometimes it is. So I think I love that you have those 4 founding principles, and we talk a lot about that too. And the other thing we really promote is generational wealth. It's these people work so hard for their money, save up, and they assume that they're going to be taken care of at the end of the day and when they retire. And it's now you got to put that money to work for you. And why would you want to just dip into your principal when you could really just live off your earnings? And now you have generational wealth to pass down to your family. We're very well aligned with what you do.
Yeah, I think the 401ks and the IRAs, and you're talking self-directed Roth and different stuff, but again, those are all government programs, but they force people into at least that's how I see it, is they force people into a kind of a consumer mindset, right? Sacrifice putting money in your 401k, which is fabulous, but you don't see any benefit for that for the next 30 years or so. And then it forces you, and again, it's in your mindset to consume that asset versus having that asset generate
work for you.
Yeah. So, I mean, it is a different mindset that people have to get a bit of a shift in the thought process. And it really, and again, that's why I think a lot of people that are in real estate kind of gravitate towards what we do, because it's the same thought process, right? Don't consume your asset.
Right. Well, and I think a lot of people that I've met over the years assume that to invest in real estate, that means you need to be out fixing and flipping properties and dealing with tenants and toilets. I think the unique thing about what we also offer is you don't have to do that. We have 2 real estate funds. One is for high net worth accredited investors, and we actually offer the same opportunity to people that are not accredited, which is very unique. More often than not, a real estate fund requires you to have at least $1 million in assets or very high income to even qualify. But my point is those real estate funds are a gateway and a pathway for people to invest in real estate without being hands-on. So they reap the benefits of us going out and managing the fund and buying real estate and the profits flowing back into the fund, and they're earning double digits on their money. Average returns are 10%, but they're not getting the call in the middle of the night from the tenant saying, hey, our toilet's backed up. Our staff and our team is managing that. So I like to get people out of that mindset. You don't have to. Most of our clients work full time. They don't have time to go out and fix and flip a house or deal with a rental. And this is another opportunity to be able to put your money to work for you in that type of an environment without being hands-on.
Right. And this goes back to what one of my friends, and I would call him a mentor, what he used to say too, is that he'd always rather hold the note rather than hold the property.
Yep.
That way he didn't have to have all the, he called them the 3 T's. He's from down south. So they have tenants, trailers, but they also had termite.
Oh, I like that one.
Yeah. But it is kind of what you do, right? So is it similar to, so what you, maybe just real simplistic is, is it more of a hard money lending position that you guys are taking? Is like, or do you line these people up saying, hey, we got people that have money and we have people that want to buy real estate, so you're just doing a marriage of the two?
It's kind of a little bit of both. So we are technically what's considered a private money lender or a hard money lender. They're the same thing. I think private lender sounds nicer, but essentially what we've done is we've created these funds that we manage, and we create revenue and profit for the clients that invest in that. So these are our passive clients. They invest capital in these funds. They're much like a REIT, but they're not publicly traded. They're privately managed, and they're fully audited funds. They are registered with the Securities and Exchange, so they're very monitored. And we take those funds and we do two things with them. We lend that money out of the fund to other investors, so that's where the private lending comes in. So other clients that are active come to us and they say, hey, I've got a deal out of North Dakota. Would you fund this deal? And we'll put them through our underwriting process, but ultimately, it's closed through our fund, so our fund makes money off interest earned, origination points. And then we take a portion of the fund and we buy real estate. So it's a blended fund. It would be considered a debt and an equity fund. And so it's got multiple streams of revenue coming in. And all that revenue is paid out to our fund members on a quarterly basis. They can either choose to have the earnings paid out. So my people that are cash flow strategizing, where they're saying, okay, I'm retired. I want to replace my income. I don't want to dip into all this money that I've saved and built up, but I want to live off the earnings. Well, they love it because they get cash flow off it on a quarterly basis. Then I have other clients that are looking for growth. Hey, I'm still working. I'm self-employed. I really don't need the cash flow, but I want to grow this account as big and quick as I can. They can actually reinvest their earnings. And so now they're actually compounding. They're earning probably 1% higher, depending upon the dollars amount invested with the compounding strategy. So it's a little bit of both, private lending and then real estate.
One of the things that just, from my own experience of owning real estate, there are obviously some tax advantages to owning real estate, but there's also some difficulties with that as well because of how the IRS looks at you as a full-time investor and stuff like that, or real estate person. Do you guys have is the tax advantages of real estate go along with your funds as well?
Yeah, that's a great question. So we have two funds that don't have tax advantage benefits because they're just cash flowing funds. They're short-term assets moving in and out. However, we do have a third option that does have depreciation and appreciation benefits for clients that are looking more for that. So we actually offer both. They're two different models, but we do have the ability to offer both. We have a lot of very high net worth individuals that they're not as concerned about cash flow. They want to invest their capital. They want good yields on it, but they also need tax benefits. So we do have a fund that offers that too.
So you can get to the depreciation without having to be a real estate professional, right?
Yeah. So when you invest in that fund, you're investing in an entity, which is if you're a member.
Okay. So you can get the benefits, because that is part of the problem of owning real estate, long-term real estate on a individual basis, is that unless you're actively involved in that,
right,
it's difficult to have that depreciation. Now, as far as the appreciation, you guys actively selling properties as well, taking advantage of some growth, and then clients are getting the long-term capital gains from a tax advantage versus ordinary income?
Yeah. In that other model, they are. Yeah.
So you can get the both of the tax advantages in that other model that you're talking.
Yeah. When we originally started really dipping our toes into this 10 years ago, we basically sold notes and we had a fund. And the only fund we offered was a fund for accredited investors. And as we've grown as an organization, one of the things that we're pretty passionate about is we believe everybody should be able to create wealth. We did not feel it was right that the only people that could invest in these alternative investments were people that already had capital. And we fought long and hard 4 years ago when we got our first Regulation A+ fund opened up. And this is a fund that functions just like our accredited investor fund, except that it has a $1,000 minimum and you don't have to qualify to go into it.
Interesting. It is nice to be able to have what I'd call middle America, right?
Yeah.
We're serving, be able to say, hey, I can own real estate, and it doesn't have to be $20,000, $50,000.
Right.
Right.
Yeah.
So what would you say your ideal, I don't know about your ideal client. What does your ideal client look like? Maybe I'll use that word and kind of let you.
Gosh.
Take that and run with it a little bit. What does your clientele look like?
I would say that our clientele that we work with is someone that either understands real estate or is wanting to invest in real estate. I'd say the majority of our clients have been real estate investors at some point in time in their life. Maybe they owned rentals, maybe they fixed and flipped, and they're at a place in their life that they don't want to be as hands-on. They're retiring, and I think that's been the case for a long time. But I'll tell you, in the last couple of years, that has changed. We have a ton of clientele that understand and see the opportunity in investing in real estate and either haven't done it because they haven't had enough capital or time. A lot of times it's time. They're working full time, husband and wife, They see the opportunity to invest in real estate. They just haven't pulled the trigger. And so I think that our avatar client has changed a little bit. We now have a lot younger people that are like, I'm not just throwing my money in the stock market and listening to my financial advisor. There's other things out there. And people are becoming educated. They're listening to podcasts just like this. They're on webinars. They're educating themselves and taking their own path to financial freedom in their hands instead of relying on the more traditional resources that we all grew up with. I always just assumed you went to the bank and you talked to your financial advisor. Those were your options. And people are more educated now. It's someone that really understands real estate or understands the opportunity with investing in real estate and is becoming more educated, I would say would be our avatar client.
Gotcha. It's interesting for many years, and I would probably pick on the baby boom generation, which is just outside of where I'm at. They were conditioned to think very strongly of just what you said, right? Go to your advisor, put your money in the stock market. But the funny thing is, before that generation, there was a whole different thought process. And now, like you said, through podcasts like this, I understand you do some training and some webinars as well, right? So
yeah,
people are logging on to those things in great numbers because they're hungry for information and they don't want to be conditioned to think. They want to be empowered. They want to be educated. But they don't want to be told, or again, I go back to, I don't want to be a gatekeeper. They don't want gatekeepers.
Right.
They want people to assist them. They don't necessarily want people to tell them. And then, the old adage of just put the money back. The market's down, 25% or whatever the number is. Just don't look at your statements. That was actually something I read on CNBC, I think yesterday.
Oh, my.
Looking at their statements. I mean, that's how, but when things are good, that's all they talk about. But that's the conditioned thinking that what I would consider the new wealth builders that are coming up, that are up and coming, they've gotten away from that. They want to be involved. They want to be hands-on to a certain point. They want to be hands-on in the education, but they don't necessarily want to be hands-on on the actual doing because they're busy doing their other life.
Right. Yeah. And being in a real estate investment, I mean, in my opinion, when you're in inflationary times like we are, the markets are all over the board, interest rates are rising, there's still opportunity in real estate and there's opportunity to pivot. I mean, when you're investing in a real estate fund, those are tangible assets that back that. In the event that markets decline, as a fund management team, we could always say, okay, we were going to sell that house, but now we're going to rent it and cash flow it. So there's a joke that says, what does an investor or a real estate investor become when markets decline? They become a landlord, because you ride out those market shifts. And in comparison to the stock market, so you invest in a stock and it declines, there's no tangible asset there. So I believe that being in a real estate fund or some kind of real estate investment is probably one of the safest places you can be. But because we're not a publicly traded real estate fund, your financial advisor is not going to advise you and tell you to go invest in something like this. So it does require people to educate themselves. And I think that's happening.
Yeah, and I just want to go back to, so what kind of education do you guys do? I mean, when we talked earlier, you were talking about you guys do a lot of different, what you call public webinars. Maybe just throw a pitch out for that if people want to educate themselves. What do they do?
So we got started as a real estate education company over 20 years ago. And what I mean by that is we will teach people how to invest in real estate. So if you're the person that wants to go out, find the deals, fix and flip the property, wholesale deals, we have online courses that actually will educate you on how to do that. And we have some very successful students that do it. And then what we realized and discovered was not everybody wants to be hands-on. And so that's where this side of the business came into play, more of the passive investing. So we do a lot of webinars. If somebody's a very active real estate investor or they want to learn how to do that, they can actually go to our website at the Lee Arnold System of Real Estate. So it's Lee Arnold System of Real Estate. All of our classes are online, which is great. COVID changed that whole industry. We used to travel. We'd go to put on 3 events a month. Now we put on 3 events a week. And people love it. They can stay at home. They don't have to take time off of work. So again, that's going to be more your active real estate investors. If you're interested in more passive paths to financial freedom, I would suggest going to our website at Secured Investment. So it's Secured Investment Corp. They can actually get in contact with myself there. They can see information about our funds that we offer for investment purposes. And then we also sell notes. You had actually mentioned that being a note holder is better than owning the piece of real estate. We also sell notes. We have a lot of clients that are very active note buyers. So we kind of offer a little bit of everything. I guess the biggest thing is determining how active you want to be or passive. And that's kind of typically determines or dictates the path.
Sure. So you made a mention, I have to ask this question just because I see from my own perspective with our real estate that we own, we're constantly, hey, we should get out, we should sell. But then I'm like, still at the same time, I'm like, well, we still have good cash flow from it. Even if the market cuts in half, the real estate market goes in half, we're still above water. Just
right.
We've held our properties long enough. What do you see with the market out there with the real estate market? I heard one guy say, and I don't know this to be true, he was making the point that we're 25 million houses short in the States right now.
I know.
Like, it seems like such a huge number, but if that's the case, then no matter where interest rates go or no matter what inflation does, housing is still going to be in demand. It might be a different type. It might be rental because interest rates are so high you can't afford the payment, but still demand. People have to live somewhere.
We're seeing the same thing, and we have the same opinion. People still need somewhere to live. I think as a real estate investor, your strategy has to change, right? 5 years ago, all we did was fix and flip. The market was hot. You bought a house, and 6 months later, you put a little money into it. You had a very good return on your investment. I mean, we were averaging 20% returns. What we're finding now, at least in our local market where we're actively buying, the market's softening a little. I don't think it's going to decline. I mean, we're in a location, Spokane, Washington, and Coeur d'Alene, Idaho, and people are flocking here from Seattle, Portland, California. I mean, it's a very desirable area to live. But we're starting to see just over the last couple weeks, houses are taking longer to sell because what people can afford now that interest rates have raised changes, right? Somebody that was approved 6 months ago is not going to be approved for the amount of house right now that they were 6 months ago because of interest rates. It changes their affordability. I don't see it declining as far as the markets in this area. I think it is going to slow down, but we see huge opportunity in rentals and specifically in small commercial. We just bought a 22-unit apartment complex. Rents have increased. And so now you have interest rates rising. People can't qualify. Now they need somewhere to live. You also have these massive Wall Street firms that have came in and started buying houses and turning them into rentals. So you've got that. Specifically in our area, a lot of the locals have been priced out of the market. Where we're at, there's been a 20% increase in value in the last 2 years. It's insane.
Yeah.
So
you guys work all over the country, though. You just don't work
we do.
your own market.
Well,
Same thing all over the country?
Yeah. Yes. We lend all over the country, but we don't buy real estate all over. We only buy in our local market. But we're seeing that. But we do a lot of lending in some areas that are regenerating. Detroit, great market right now. Guys can go in, buy a house for $30,000, put another $30,000 in it, and they're renting that thing for $1,600 a month. We lend a lot in Ohio. We love Texas. Texas is a strong market right now. We've seen a lot out of Missouri. So from the lending side of the company, we are nationwide. And we've seen the other thing you have guys that were fixing and flipping, and now they can't get materials, or materials the price has increased. So you have to take all that into consideration, which we do when we're underwriting. I have seen houses taking longer to sell. Some of our borrowers haven't exited their loans as quick as they normally would have because it's taken a little longer to sell. But a lot of these guys have also changed their strategy and now they're renting them. Gotcha. That's where real estate investors are successful. They're nimble, they watch the markets, and they change their strategy if they have to. You can't be so set in one path, thinking that's the only way that you're going to make money with real estate.
Yeah. Here in our office, I constantly talked about my belief system is about addition. It's not about subtraction. I'm sitting there going, we have these long-term rental properties. And when everybody was fixing and flipping, I'm like, yeah, that's part of it was I just didn't have time nor the energy to do it.
Yeah, they're exhausting.
Yeah. I mean, it's just my passion wasn't doing that. I understood that. But guys were making a lot of money doing it, but it wasn't us. And so I'm like, we'll just keep those because they're still cash flowing. And
right.
Add on to that. Let's not get rid of the things that are still good. Let's find things that we can add on to a portfolio that make it better.
Yeah. No, we agree too.
Yeah. And when you control the banking function, it allows you to do a lot of those different things because banker, the Wells Fargo's of the world, of the Bank of America's, they're going to say, you need to do this, you need to do that, or we're not going to give you approval on these loans. Then if have the ability to give us a thumbs up or thumbs down or give us dictates of what we have to do, then we're not control that function.
Right.
We're not really running a business. Thanks for. So that's kind of where you guys come along too. It's like you have other lenders out there. They're saying, hey, I got some money. Let's put it to work. And then you're matching these people up.
Yep.
One question I had, which you kind of answered, but I want people to hear it again from you, is that if I was listening to this, I'd say, I want to go out and buy my own real estate. And maybe I want to do it on my own. Maybe I can make more money doing it on my own. Is that, what would you say to somebody that would say something like that to you?
I would tell them that there is opportunity to make really good money being hands-on, but you need to have a system. You and our clients, and when I say clients, I mean our borrowers that get themselves into trouble are typically the ones that try to do it themselves, right? They're in there at night, and I've done this personally. The first fix and flip my husband and I did, we did it all ourselves. It took us 12 months. We made very little money. It turned out beautiful, but I don't think time is money. And so the clients that typically aren't successful are the ones that don't have a system. They don't have a team, meaning they don't have their contractors in place and a real estate agent. And the quicker you can get in and out of those deals, that's the guys that make the good money and the profit on them. The ones that take way too long, they're over budget, they don't plan for unexpected things are the ones that typically don't make the money. And what I would say to that is, go to our education, because that's what we teach people. If you're going to do it right. The ones that we see that fail are typically the ones that haven't went through the education and don't have the experience. But if you have the capital and you want to invest passively, you're going to get great yields on your money just investing in the fund or buying a note. You're going to get on average 10 to 12%, and you have zero headaches. So you got to look at your time. How much time do you have that you can dedicate to this? Or if you're working full time and you have a career or you're self-employed, it's probably not very realistic that you're going to be an active real estate investor unless you have a team behind. And if that's the case, then maybe the passive path is the better path.
Yeah, in Nelson's book, he wrote, in the book, Becoming Your Own Banker, he wrote, there's a cost of acquisition, right? So we have to always look at that. I think there's a lot of people that don't look at it because they look at their time as being of no value. They look at their money as having no value because of the interest rate the bank is giving them to save the money. So they don't understand that cash on hand is one of the most valuable things you can have.
Yep.
And then putting it to work. And then also, what is it that you're charging for your time? And what is it you're charging for the use of that capital, which is time or money? Right?
Yeah, absolutely.
And so that's where Nelson's book, I really think, hits the nail on the head. Is like, he kind of boils it down. It's like, you got capital, you have assets, right? It's time, it's your money. When they put them to work, you better make sure they have a great rate of return in order to put them on the street, put them to work.
Yeah, no, I couldn't agree more. And I just kind of look back at over the last 10 years, the students of ours that have been very successful and then the other ones that have been not as successful or challenged. And it typically circles back to the fact that they didn't have the infrastructure, they didn't have a team behind them, and they tried to do it themselves and realized very quickly that that's not the best use of their time. And again, like you said, they don't value their time. And that was, I personally did that. And then after the first one, we're like, that was dumb. We made 10 grand and it took us 12 months and all this headache, but I needed to do that to see that. And I think people go through those, and that's what we're here for. We're here to educate people. I'm not here to give financial advice, and I'm not here to tell you to do one thing or the other. I will give you the facts and show you the paths to both, but that's really up to an individual to make that decision. And I don't think that people value their time enough. They look at the dollar. I can make 30 grand. Yeah, that's going to take you 12 months when you could put your money to work for you and probably make 20 grand and have zero headaches of that.
Right.
Yeah.
The difference of 10, if you put it over are you making 2 or 3, 5, $10 an hour or whatever it is, right? And all the stress that goes along with it, right?
Right.
Always
right.
a big fan of having you understand what your cost is. Now, to your point, I went through the same thing, is that those first deals you do, it's all about education. There's an old adage that says that there's no such thing as a cheap education.
No.
But you learned, right?
Yeah.
Take away that, hey, this is what I learned from it. And if I learn real quick that I'm never going to do it that way again, that's really what you want to get at. So
yeah.
And find some, again, it goes back to, we've read the book, The Richest Man in Babylon.
Yes. Yeah.
Find somebody that knows what they're doing and work with that individual is kind of what part of the theme of that book was. because
Yeah.
they're more valuable because if you don't, then your gold and you will be separated fairly quick.
Yeah. Our CEO always says he surrounds himself by people that are smarter than him.
I would agree. I don't want to be the smartest guy in the room. If I am, I need to find a different room.
Right. That's exactly what he says. And it's so true.
So, well, Heather, I appreciate this. I appreciate your time. We probably could have conversations for hours, but I know you're busy. And again, I thank you for taking your time to visit with me about this. And just real quick, if somebody wants to know more, just as a disclaimer, I'm not advocating investing with your company. I'm not advocating investing in funds at all. That's not what I do. I teach people how to take control of the banking function.
Sure.
But what we do, what we firmly believe in is that money has to flow, in other words, become stagnant. And so this is maybe a possibility that works for you. If you're sitting there going, hey, I want to learn more, I want to be educated, this kind of fits with what Heather's saying is kind of fits with what I want to do. Real quick, how do they get a hold of you one more time again?
Yeah. So the best way to get a hold of me is to go to our website. And again, that is Secured Investment Corp. So Secured Investment Corp, they can actually schedule an appointment with me and my team there. And we also don't give financial advice. I mean, we have paths for people to deploy capital and we will educate them. But just know, in full disclaimer, we're not a financial advisor. But we would love to talk with you more. We could talk for hours. There's so much more to cover. But this is just to kind of put it out there. If people want to learn more about real estate funds and notes, go to our website. You can schedule a 15-minute appointment. There's no obligation for that. And we'd love to just discuss things further.
I said that would be the last thing, but I had one thing I wanted to ask. It was just on top of my note.
Sure.
Because I have a lot of clients that have brought this up too. Is how about like short-term rentals or midterm rentals? Is that something you guys do as well? Is there a marketplace? What do you see? Because there's a lot of people, the VRBO crowd, right? This is the best way to do it. But now I'm hearing that's gotten real soft with interest rates and stuff.
Yeah, I think the VRBO thing is dependent upon location for sure. We just closed a loan for a client out of Myrtle Beach on a $1.4 million property that he charges $1,500 a night to rent. So I think VRBO the short-term rental is very dictated by location. We actually have funding options for those types of properties. So if you are an individual that's listening to this, that's looking for funding for short-term rentals, we have options for that. And then we also have options for long-term that are outside of a bank. We just closed a deal at 6%, which is not that far off of what bank rates are right now, for a guy with a rental portfolio. There's other options out there. If you're an active real estate investor looking for some funding options for either of those, get a hold of me and I can get you in contact with our lending arm of our company because there's options outside of your bank out there.
And those options, why use that instead of going to the traditional bank? What would be the reason why I want to talk to you?
Yeah. There's not as many hoops to jump through. These programs typically just want to see what the cash flow is. They're not going to grill you. I mean, obviously, they're going to pull credit and that type of stuff, but they're much more lenient than your more traditional bank. And if it is a rental that you're doing a value add to, so maybe you're buying a property and your intention is to rehab it, then rent it, there's funding options for that. Most banks aren't going to lend you money based off of the after repair value. That's really where we fill a void, is we do that. We have some pretty competitive rates on those types of programs.
Sure. Or, like I said, if you have a combination of using your own family financing system with an outside source like you guys have, that might be a great combination.
Yeah, we're pretty creative. If the deal makes sense and the asset's there, we're going to get the deal done.
Yeah, I heard somebody say this too, is like the interest, a little bit of interest you maybe save on doing a bank loan isn't worth the 10 pounds of flesh that the bank requires.
Oh my gosh, it gives you brain damage. My husband and I don't use that type of financing for any of our investment properties. It's just not worth it.
I think, it's about control. Quite frankly, it truly is. It's not about the rate. It's not about the interest, anything else. It's about control. And if you can't make a deal happen in a short amount of time, those deals will go away, or it's just not worth your headache. Again, if I have to go, one of my colleagues, she buying a house. It was just like for the better part of 3 months, just the conversations every week about the financing was just off.
Well, and like you said, you typically lose out on those deals because sellers aren't going to wait around. In this type of a market, they know that they can pass on your deal because they got a guy with cash or a private lender that's going to fund it in 2 weeks. So time is of the essence. And I think that's a big part of why private money is so important for real estate investors. They'd rather pay a little bit higher interest rate knowing they can get a deal done in 2 weeks than get brain damage waiting for a bank for 3 months.
Right. They have all their hoops that they need. All the boxes that these underwriters, which, again, I think they're just paper pushers. They just check boxes. Right?
Yeah.
As long as the boxes are all checked, they're fine. And it has nothing to do with anything except for the fact that they got their box checked.
Yeah.
And then they'll give you a loan. They'll grace you with their ability to get their loans. But,
how nice of them.
anyhow, I know I was going to keep it a little shorter, but I had to bring that up because I did have a couple of questions for some clients that had asked about short-term rentals. And to your point, it's about the location, it's about where it's at kind of deal it is. All right, again, I thank you so much for your time.
Absolutely. Thank you.
As things change and as the environment changes out there, maybe we'll have you back on. We can talk about this again. So,
yeah, that'd be great.
If you don't mind.
Yeah, thank you for having me. It was a pleasure.
Bye-bye.
Bye.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.